Now that you understand how to identify support and resistance levels, I'm going to show you how to take high probability trades by focusing on the angle at which price comes into a key level of support or resistance. The angle at which price comes into a key level of support or resistance will affect the magnitude or the size of the reaction coming off of that key level of support or resistance. Think about throwing a bouncing ball from above. The first bounce into the ground will elicit the biggest move, and then each bounce thereafter will diminish in size. The same is true when analyzing the angle at which price comes into support or resistance level, as well as the magnitude of how many times price has hit that particular level. When price approaches a key level at an angle of 45 degrees or higher, it will elicit a major move a high probability of the time. So if you have a look at the chart over here, you can see price action breaking through this moving average. Now, in this example, we have a moving average. It doesn't matter whether it's a horizontal or diagonal or a moving average. The point is you're using something to give you an edge and identify that key level of support and resistance. So in this instance, price pushes all the way through, has a little bit of a back test, a bounce, and now we can start to draw the angle. As price starts to approach down, using the protractor tool on TradingView, we can see it is a 62-degree angle. So that checks what we just said. It's bigger than a 45-degree angle, meaning it should elicit a major move. Not only that, but it's also coming into that support level for its very first test, which also adds additional confidence that this first bounce should be a big one. And as price comes down, you can see the reaction off that key moving average. It leads into a massive move of 57.65%. So you can see that using this in combination with everything else you've learned in trading can give you a high probability trade setup. So this is where the trade opportunity comes into place. When you understand this, you'll understand how to set up your trades and look for big moves in the opposite direction. Here's another example where price broke through a key moving average, which should have held as support. And we can set the angle in place over here. It's a 45-degree angle. Price is moving back towards that moving average to back test it for the very first time as resistance. And ultimately, you can see there's the reaction, big reaction towards the downside. It leads to a 63.5% move in the opposite direction, which would result in a beautiful swing trade opportunity. If you have a look at the following example over here with horizontal levels, we'll look at both the resistance and the support. You can see price over here, again, more than a 45-degree angle, moves into this resistance zone over here, leads to a big reaction in the opposite direction. Now, it doesn't always need to lead to a complete reversal in the trend. In this instance, it creates a higher low. Price then comes up to create an equal high, rejecting off that level. The angle is still around 45 degrees, but because it's coming in for its second test, you can see the probability of a big reaction slowly begins to diminish, and then you get a smaller reaction. So price then sets in its second higher low, comes into that zone again, and an even smaller reaction. At this point, the trend is weakening and you expect price at some point will probably start to push through, which is exactly what happens. So you need to consider how many times prices come into that level with the angle being 45 degrees or more, because although in this instance the angle is still 45 degrees, the third touch would not be big enough to actually take a trade off. Remember, when it comes to your trading, you always want to reduce the risk as much as possible and increase the probability of success by as much as possible. So not all support and resistance levels are built the same. As a general rule of thumb, some are stronger than others, and this would be the order of significance that I would look at support and resistance levels. Number one would be horizontal levels. Key horizontal levels are usually the strongest. Next would be your slow moving averages. Typically, as a rule of thumb, your slow moving average is going to be your 200 moving average or higher, specifically set on a high time frame like a daily or a weekly chart. And lastly would be diagonals. The diagonals would be used on a lower time frame, and those hold the lowest significance because they break a high probability of the time, and oftentimes they counter to the trend. Finally, always remember that when price approaches a key level of support or resistance, whilst moving in at a 45-degree angle or higher, and more specifically, it's coming in for its very first touch point. That is a high probability trade which will elicit the greatest move. And your key levels are horizontal levels, high time frame moving averages, and diagonal levels of support or resistance. If we have a look at this example over here with the horizontal support, again, you can see more than a 45-degree angle. It's a strong movement towards the downside, coming in for its very first test of that support level, which means high probability trade opportunity. You'd be looking to place your stop below that support level and playing the reaction in the opposite direction. So this would be a long trade, and price goes up, sets in a lower high, comes down. In this instance, the second time did result in a bigger move up, and price then comes down. So you can see something interesting happening over here with a potential break of structure. The next bounce leads to an even smaller move. And for those of you out there who might be a little bit more advanced, you can probably already see it. This is a head and shoulders formation with a supporting trend line being your neckline, which ultimately leads to a further breakdown at a later stage. Now, in the very next lesson, we're going to dive into detail covering both candlesticks and chart patterns. So you'll learn a whole lot more about how to identify these chart patterns, which just takes your trading to that whole next level. Once you have this understanding of how to utilize support and resistance, how to understand the angles, and using the chart patterns in combination, you'll have a super powerful strategy to succeed.